Well, Treasurer Jim Chalmers has today confirmed the government asked Treasury for advice on negative gearing and capital gains tax. Speaking in Beijing, he said it's not unusual for governments to get advice on contentious issues, adding they have a broad and ambitious housing policy already. Changes aren't part of it. Well, for more on this speculation and what it would mean for the business community too, I spoke with Geoff Wilson, Chairman and Chief Investment Officer at Wilson Asset Management.
Well, Ingrid, first of all, it's incredibly disappointing. You've got a government that we all had very high hopes for initially, particularly Jim Chalmers as Treasurer, and they really haven't delivered. They've already, about a year ago, they broke one of their promises, pre-election promises about changing the franking system slightly. They said that was off the table. Now there's potentially another tax change. In terms of, you've got to look at it both sides. There's the demand side and the supply side. Now they're talking about if negative gearing is potentially for houses is they're focusing on, then and the capital gains tax. That's the demand side. Why don't they do something on the supply side? Make it more efficient. Take out a lot of the bureaucracy and costs. And what about giving the building industry incentives, to build more homes? And the tough thing is on the demand side, we know the immigration story, so a little bit is, the actual government has brought it on themselves. To me, and just to do piecemeal tax changes, like Australia needs a significant rethink, and this has to be bipartisan, and all the senior people are calling for it, because if we don't do something, then our living standards will continue to decline.
Well, I mean, that's true. And we've had this criticism of big business a lot over the last month. We've heard it at the BCA dinner, the Minerals Council's dinner, which I think was the week before that, both of which, we saw the government be directly criticised for not fostering productivity. The government's, reiterated at these events that it's there for big business, though. So what do you make of that?
It's just, the lifeblood of Australia is small businesses. So you need an efficient environment to operate in, and unfortunately, the government has been making it more difficult. Our productivity levels, they're just incredibly it's just incredibly poor, our productivity numbers, and so we have to significantly increase that productivity. So the government should be really working very closely with business, and to see business publicly criticise the government, it's down to the last straw. So to me, business tries to communicate with the government behind closed doors, and obviously, just on a mass scale, everyone's just incredibly frustrated, and so they're calling the government out very publicly.
Yeah, and how much do industrial relations play into this? Because it almost seems like it's gone back to the old-fashioned Labor government, old-fashioned Labor government ways. Parliament, I think, has passed about 5 pieces of industrial relations legislation. How does this impact business? Is the answer abolishing these multi-employer bargaining? Because we're hearing, the miners in particular go to war on this.
It must be. We must have, obviously look after workers, but also, we've got to look after business. And I'm not an expert in, what should be done, but to me, there's a lot of people that can, they've got really good advice to make an organisation as efficient as possible. I know from a microcosm, from our business, which is a small funds management business, we've already had some frustrations around the new legislation.
All right, let's talk more broadly when it comes to the economy. All right, we've had the RBA had another meeting this week, rates on hold, inflation sticky. I know we've seen it fall over, obviously, this week, but employment relatively solid. Do you think rate cuts are off the table for now? The RBA governor certainly seems to suggest this.
Yeah, right. Like when you look at the inflation number, the adjusted one, it is still too high. Unfortunately, we've got the government the last two budgets have been expansionary budgets, so they're pumping money into the system, and then you've got the government also then criticising the RBA for not dropping rates. Now, I think rates, we're not going to see rates drop for the next 6 months. It could even be 9 months. It's the economy, and the distressing part is the economy continues to weaken. That's all from the companies we talk to over the last 3 or 4 weeks. It's weaker than it was a couple of months ago.
And so does the government need to do more there? Because we know monetary policy is a really blunt instrument anyway. It's not necessarily targeting the areas of inflation that need to be targeted. So does the government need to do more there?
Oh, 100%. First of all, the government's got to support the Reserve Bank and let the Reserve Bank, and not try to bully them into anything. That's the first thing. And secondly, the government, you shouldn't be running an expansionary policy, when you're trying to get inflation under control. So unfortunately, the government's got to it has to work logically, and that's what they're not doing.
I want to shift the conversation to markets more broadly. Obviously, we're seeing rate cuts around the globe, in the United States in particular, and over in Europe. How is this impacting the broader share market? Knowing that obviously that differential perhaps between Australia is widening a little bit because we're on hold for a little bit longer. What do you make of this in terms of how it impacts markets?
Well, the interesting thing is when you're in a cycle where interest rates are being cut, the market tends to not perform well because you've already had the expectations of those cuts been factored into the market. And most markets we've got, standing pretty close to record highs. The only time in a falling interest rate environment do you see markets perform strongly, and that's when earnings are accelerating. Now, at the moment, as we just talked about earlier, the economy is weakening, so earnings are declining. So we're probably, I would expect that it's going to be a challenging market, as in the equity market. The economy will continue to improve. In Australia it'll slow, but globally when interest rates are being cut, and we saw them in New Zealand already a little while ago, cutting rates, you'll start seeing some green shoots coming. But then in terms of, you really won't see a strong equity market until earnings are accelerating again, and that's still a time off.
So do you think opportunities will start to present when we start seeing rate cuts here at home?
Well, I think when we start seeing, I think there's going to be a lot of pain before that, unfortunately. In terms of the broader economy, and I think this next reporting season is going to be challenging for most Australian companies. So that's the 6 months to December. So once we've seen how difficult it's been, then I think there might be some good opportunities.
What about opportunities? I mean, I know that you're a shareholder or you've invested in Star. It's obviously had a rough day today. I think it's down about 50% at the moment. Do you look for opportunities like this, and what's your view on Star in particular?
Yeah, I mean, one of our funds has a reasonable position. Not big in terms of the size of the fund, but a position in Star, and obviously like today there is blood in the street. With Star, and everyone is backing the CEO to deliver. The new CEO, and that's our expectation. Would you be buying it today? If you're a real counter-cyclical investor, you would. I would like to see. I think in terms of before we add to our position, we'd like to see a few other positive things happen. So I mean. If you cast your mind back a number of years ago, everyone thought casinos were great cash flow businesses, and the casinos, Star has had a very difficult time. So there will be light at the end of the tunnel. The problem is for the investors that have been with it so far, no one can see it at the moment.
Geoff, I've got to finish off by asking you, there's a lot of chatter in the funds management space at the moment. We know Platinum came out yesterday rejecting Regal's takeover offer. Your name has been thrown in the mix. Are you interested in a tilt at Platinum?
Look, thank you for the question, Ingrid. Ken Nelson has built an incredible business at Platinum, and Platinum, like Magellan, have had a very challenging last few years. When Regal announced their bid, from my perspective, I thought, well, that's interesting. We've actually made a number of takeovers for other listed investment companies. I think we've made 13 takeovers of listed investment companies. Now, this is the operating company we're talking about. I think it's an interesting play. Whether anything happens, time will tell. But I think it's a great brand, it's a great franchise, and it's interesting.
Well, we know it'll depend on price there, Geoff, so we'll be watching this space. Thanks for joining us on the program today.
Thanks, Ingrid.